Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structure resistance area. From here, all this previous rejection to the downside was created. Again, here the market tested its zone and rejected it to the downside. As we're testing this exact same area, we could expect more bullish price action for a deeper test of that zone, as already happened here and here, before then getting a potential rejection to the downside. So short-term bullish price action definitely seems a possibility here for gold. Now, dropping down on the weekly, what do we see? From a weekly perspective, first of all, we can see how the market from here just created a massive impulse to the upside. Now, that is exactly what we expected. In fact, if you remember, I made a full breakdown when gold was here, explaining all the reasons for which this rejection to the upside was definitely possible and was highly probable. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, what we can see at the moment is that we have a market which is testing previous weekly resistance, which has now turned support. In fact, from here, the market created this previous rejection to the downside. We then had the break above that zone. At that point, that previous weekly resistance was turned support here. The market had tested its zone and started rejecting it to the upside. So in a situation like this, we could expect more bullish price action to be created away from this area. So on the weekly, everything looks pretty bullish. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see how we had an impulse followed by this accumulation phase, from which then we had another impulse to the upside, which at the moment has just been followed with the start of this correction. Now, what we know is that if we have an impulse and we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements, which are currently lining up exactly at these two zones. And if we identify them with this box covering the area in between, we can see how this is also lining up exactly with this previous daily resistance here, again acting as resistance here, that since the market has now broken it to the upside and is currently going and retesting it, is acting as support, because what we know is that previous daily resistance, once it gets broken to the upside, it becomes support. So what we could expect is the market to go and test this confluence of support given by both the previous resistance turn support and the Fibonacci levels, and then to potentially get rejected to the upside. So we could expect from here to see bullish price action getting developed away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, we went from having 105k net positions all the way up to having 181k net positions. So we had a huge increase of the net positioning, with another 7,200 longs added with the last report from an institutional perspective, and 15,000 shorts getting closed. Now, this obviously makes gold stronger, increasing the probabilities that if the market will test this confluence of support, we could get rejected to the upside, since institutions are currently longing gold. So how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility at the moment to gain completely free access to the mentorship program by following these 3 easy steps. So I really suggest that at least you go and check it out at transparentfxtrading.com. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.